Thursday 16th of May. Again, most of the action in the stock markets yesterday, forex markets remained pretty quiet. This is the S&P. I'm just going to check the weekly chart. Yeah, nothing to say on there. Right, so we bounced off 28.15. We started to sink yesterday. I'm just going to point out the fact that we could be forming this head and shoulders pattern. So just to remind you, this could be a very small left shoulder and this could be a very small right shoulder, particularly if we hold below 28.68. Then we break below 2800. That would complete the pattern and give us the sell signal, which would send us down about 150, 160 points. Now, having already fallen that amount, of course. So the hourly chart is clearer to me of what's going on. You can see we are in a 2-week downtrend. We've got the trend lines showing us. We held that perfectly yesterday, almost perfectly. Little spike above, but even on the hourly bars, we closed below the trend line. So this keeps pressure to the downside. We've got confluence of fibs at 2860 area, which of course held. I had us getting into shorts around 2860, 2870, so we didn't quite get into that band. But if you were getting short around 2860, this looks all right. If you're not short already, it does look worth getting short in the 2850, 2860 band, because of course the trend lines are decreasing. Yesterday when I wrote the report, the trend line was up here, which is why I had 2860, 2870. Okay, we have got a higher low here, but we would have to get up through 2870 before I turned short-term bullish. So have stops above 2870, and then if we do break up through there, yeah, we could see 2800, 2805 quite quickly. That's a decent resistance level. If you're short there, you need a stop above 2915. Same thing for the Nasdaq. If we hold the 55-day moving average, which today is around 75.36, we can form a head and shoulders in a similar pattern to the S&P. A break below 72.90 would complete the pattern and see us drop something in the region of another 590 to 600 points from there. The short-term chart actually looks a little bit more bullish than the S&P. You can see we've broken above that short-term trend line and the 38.2% fib. So this is a little bit more confusing. Maybe we'll push up to the 200-hour moving average at around 75.80 and the 50% fib. I can't rule that out. So slightly conflicting there. Dow Jones again, something similar in the form of a potential head and shoulders pattern. I've got the neckline here at 25,215. Little recovery yesterday, held the 100 and 200 day moving averages as support. On the hourly chart, this actually looks more negative, if anything. So we've got a bit of a mix. I'm going to go with the S&P and stick with the negative view. I'm not sure if this trend line is particularly relevant. I'll re-examine that in a minute. Okay, there we go. Quick edit. I put a trend line in which is just over a week old. So that seems to have held, joining the last 3 peaks. So yeah, if anything, this looks more negative than the E-mini S&P and the Nasdaq, because we didn't even manage to get to 38.2% fib. And if we do get there, the 200-hour moving average will be sort of at that intersecting that price there anyway at 25,770, so that will add to the weight of that. We'd have to get up through 25,900, isn't it really, for me to turn short-term bullish, and then we can push up to 26. 120, 130, maybe even, well, the 500-hour moving average will be down around that area by then anyway, but we'll examine that if that happens. But for me, I'm sticking with a bearish outlook, and I'd love to see these head and shoulders patterns complete. It would just be a nice simple trade, get short, and if we get a weekly close below there on Friday, that would certainly confirm it for me. I think the DAX benefited from Trump's tweet about not putting tariffs on the import of cars to the US. So we've had a good run up to the 50% fib, but we can see that we've run into 200 and 500-hour moving averages at 50% fib. So that seems to be what capped it. there's not really anything on the daily chart, so I'm going to have to stick with the hourly charts. But you can see why that level is important. 12,140, 12,160. So if we get up through that, it's going to look a little bit more positive, and we can at least target 12,195. For me, then the big resistance is around 12,240, 12,260. Aussie dollar continues to trend lower as expected. That's all I can say. Yes, we are getting oversold, or we certainly have been oversold for quite a long time in the daily chart, but in the absence of a buy signal, I'm sticking with the shorts. In the short term on the hourly chart, nothing particularly bullish, no, so I'd be happy to stick with short positions on that and wait for the buy signal in oversold conditions. Again, New Zealand dollar perfectly tracing the trend line as we head lower as expected. We've been looking to stay short the New Zealand dollar and the Aussie dollar. Clearly the New Zealand dollar will have to get up through 65.90 to look more positive, or at least to change the trend to a sideways direction. So if you're short, you look good. Just put a stop in above 65.90. Dollar yen bears are taking a break. We've been moving sideways this week. Choppy, difficult to trade. The 100-hour moving average is providing all the resistance, as you can see, the blue line. So we've got that at around 109.60. We've got then resistance at 180. Sorry, 109. Yeah, 109.80. Call it. By the time we get there, the 200-hour moving average will be sort of reaching that point too. So bulls need to see this above 110.00, I think. Until that happens, bears remain in control. This is the yen has been benefiting, of course, from weak stock markets. A bit of a bounce back yesterday, but nothing particularly strong with the S&P and Dow Jones bouncing back. So I think that eventually this could just be a little consolidation triangle pattern, and then eventually we break lower. Again, we are oversold, but without a buy signal, I wouldn't even think about getting long. Direction wise for the euro, US dollar, the euro, yen, and the dollar versus a Canadian, I've got no opinion, so there's no point me showing you the chart. It's just, if you're trading those markets, it's simply a case of trading the levels, get in, get out, see if you can nick some pips. Right. Cable I've been quite negative on for quite a while, especially since we rejected that trend line and then came back below the 100-day moving average. Then we broke below the 200-day moving average, and now we've broken below the April low. So not surprisingly, the market continues down. I'm now looking for a test of very minor support, the 61.8% fib at 128.00. If you've made some good money being short, you might want to take some profit there, and then you can resell on a break below 127.70. But I would not be trying a long position even as we head into oversold territory. This chart looks pretty negative. I'm not really following the Brexit story, but it seems like a right bulls up, and no one seems to have the appetite for a long position in cable. Gold, I remain bullish after the breakout above the trend line, the 3-month trend line, well, 2 and a bit month trend line. Okay, we're consolidating at the moment, which is giving us a chance to buy into longs if you didn't manage to get them on this very sharp break. We're holding the 55-day moving average, which is around 12.92, 12.91, so that is encouraging for me. Yes, we're heading into overbought territory, but I'm not going to be too worried about that. Gold tends to be a safe haven, just like the yen, so the fact that I remain negative on stock markets means I'm happy to remain positive on gold. I am short the stock markets and I am long gold. 100-hour moving average, 200-hour moving averages certainly looking positive. 100-hour moving has crossed over the 5 and the 200. The 200 has crossed over the 500, so we got those bullish crossovers on the short-term charts, and we're in this upward channel. What more can I say? The short-term fibs around 12.94 are holding, at least with little spikes below, but they're holding. This looks like a pretty bullish picture to me. I'm going to have to admit I am wrong if we break below this fib and trendline support down at 12.88. That's where I would have to get out of my longs. We've got the same sort of thing around, well, 12.86 here. So now if we do break down, but we've got 12.85 support in the trend line, but we would have broken so many short-term moving averages, fib levels and trend lines, I would not be feeling too brave down here to get into a long. So I guess the most sensible thing is, I showed you that 12.88 level on the short-term chart. I guess the most sensible stop would be below 12.85, but of course it's a long way down and I'll probably be out before then. Silver chart. Well, silver's heading sideways, but we're in a bear trend. Well, certainly for this year, we are in a bear trend. We'll have to get up through 1484 for this little short term, this sort of 2-month channel to be broken. But really, for me, I'm not bullish unless we get above 1492. That's the 200-day moving average and the 23.6% fib. And I would be far more encouraged if we get up through 1496, 1497. In WTI crude, we've been using 60.90, 60.70 as a base to buy into longs, and how well that has worked over the last 1, 2, 3, 4, 5, 6, 7, 8, well, nearly 2 weeks now, apart from this little spike down, which okay, so that remains the case. 60.90, 60.70 is a strong support level. Where did we get to yesterday? 60.85. Maybe we're going to start pushing up towards 62. Well, if we get up through 62.55, look for 62.90, 63.00. That's a sort of fib and mid-Bollinger Band resistance. We're going to struggle there. I don't think we'll push any higher, but if we do, you do have a lot of resistance around 63.90, 64.10.